Hello, everyone. This is Ted Bauman here, editor of the Bauman Letter. I'm here with Clint Lee. Angela Giroux is out today, so it's just going to be Clint and I. Obviously, the big news, other than what happened in Washington the other day, is what's going to happen now that we know the results of the November election. It seems odd to say that, but we haven't known who was going to control the Senate right up until the other day here in Georgia. Now we know it's a very narrow majority, but it's a majority nonetheless, and it means that people are expecting things to happen. So we want to talk about that today. The second thing is who's going to benefit and why will they benefit? There are a number of moving pieces here. There's policy, but there's also what's happening in bond markets. And then the third thing is how realistic are some of the expectations about what is likely to happen in Washington. So to tee this up, I'm going to ask you, Clint, who are the winners and losers likely to be from a unified government? I mean, in the best case scenario, and what could get in the way?
Well, you mentioned unified government, but there's actually more gridlock that's going to occur there than I think most people think. And a lot of that has to do with the Senate outcome. Yes, even though the Democrats do control the Senate now, it is by the slimmest margin possible. It's 50-50 between Republicans and Democrats in the Senate, and incoming Vice President Harris will have sort of that tiebreaker vote. But Senate rules require 60 votes to be able to move on pieces of new legislation, and so that you're still going to have to see bipartisan support, especially in the Senate, to get some of this legislation through that's on Biden's agenda. So what I would look for in terms of the winners here is where you've seen areas of bipartisan support for certain spending packages or new legislation, and on one of those fronts has definitely been with renewable energy. Because we've seen in the past both Democrats and Republicans have talked about wanting to pass a new infrastructure bill that would help the economy get out of the funk that it's in. We saw payrolls today as recording this disappointed. And what Biden's talked about is making renewable energy kind of that new Green Deal, a key hallmark of that plan. And so we've already seen a big tailwind for renewable energy. I mean, here's an ETF. Yeah.
Sorry, but before you go to that chart, I just want to share with the viewers. This is, as Clint's saying, there's already tailwinds. We've had some positions in our Bauman Letter and in our Profit Switch portfolios that have just taken off like rockets in the renewable sector recently. So when he says tailwinds, he knows what he's talking about. We've done very well there. So,
right. Well, the costs have come down, right, for renewable energy. There's a lot of consumer interest from a cost standpoint and just from a climate change standpoint. And so those were already there. That was already supporting these ETFs, these stocks moving higher. And now you have the prospect of more money coming into this from an infrastructure bill. And yeah, here's that chart we're talking about of this is PBW. This is a clean energy ETF. And I mean, it's up 236% just over the last year. And we've seen those gains, as you mentioned, I mean, just recently start to accelerate because of the potential to see kind of a green energy agenda come out of Washington pretty early on. Now, if investors are looking at this chart and they don't like buying something when it's already up 236%, there's another sector I've been keeping an eye on that I think is in the very early stages of a recovery. And this is another area where, because the Democrats are now in control, you could see them put forth some legislation on this, but that's on the marijuana side. You've seen bipartisan support for some sort of legislation on cannabis, whether it's for decriminalizing it or recreational use, whatever the case may be. I think there's 15 states now now allow marijuana for recreational use. And here's a chart of ticker MJ. This is the Alternative Harvest ETF, and just look at how far this ETF had fallen from its highs just over the last couple of years. I took this chart back several years just to show sort of this base building process, this bottoming process that had been going through. We had sort of that proverbial golden cross, what I'm showing with the black arrow on here. You got the 50-day crossing above the 200-day moving average. So this is something that I feel like relative to renewable energy, this has been flying under the radar a little bit. And we're just now starting to see this share price tick up. So this could be a very attractive entry point for people wanting to look at the marijuana trade right
Right.
here.
And what about some of the absolutely, I mean, that's certainly a definite possibility. And what about some of the more traditional run-of-the-mill sectors? Are any of those likely to benefit from what's going on?
Yeah, I think so. And that's because of the move we've seen in interest rates. One of the areas that I've been paying attention to is financial services, especially banks, the banking sector. And that's because of the steepening of the yield curve that we've had. I've got a chart of the yield curve right here. This is the 10-year yield minus the 2-year yield. And look, I mean, because of the Fed's lock on short-end rates are not going anywhere. And we've seen the 10-year yield backing up here, back above 1% over the last week or so. And we've already had steepening of the yield curve, but it's only been accelerating, and that creates a more positive environment for banks. You know, they borrow short, they lend long, and they earn the difference between those two rates. And when it's steeper like this, and when it's moving in that direction, that helps out their profitability. So, and banks have been beaten up relative to the rest of the market for several years now. So I think now's the time to start to take a look at that sector as well.
Right. And on that score, I noticed that in your Flashpoint Fortunes product, which has just come out, your options, I've noticed a couple of financial stocks creeping into that. So clearly you're putting your money where your mouth is on that one.
Yeah, absolutely. And there's several banks that you've really, you know, part of the process for that service is to rank out stocks in a quantitative model. And you've seen improving scores on several of those banks due to both analyst revisions coming in because of what's happening with that yield curve. And you're starting to see the momentum pick up there as well.
Right. And in some cases, it's a question of how much worse could things get for those banks. So you're starting from a very low baseline. So that's what you want to do to make money, right?
Right.
So what about, I mean, does the interest rate scenario pose any potential threat, do you think?
I think so. I mean, I think that's the main threat right now to sort of that Goldilocks scenario is what ultimately does happen with rates. So here's a chart of the 10-year treasury yield, what we're talking about, yields starting to back up here. And it depends on how quickly this takes off and how much it can be contained. If there is a rapid rise in yields, you know, that's going to be a major challenge for certain areas of the market, because basically what you have going on is, you know, the Democrats are going to want to try to spend big where they can on some of these stimulus packages. But at the same time, because of that gridlock you can still see in the Senate, you're probably not going to see meaningful, you know, tax reform, tax increases, at least, whether on individuals or corporations that could help pay for some of this. So the answer is that now you've got this flood of treasuries coming into the market. I think the most recent estimate I've seen for 2021 is that there's a $2.3 trillion deficit that we're facing. But then at the same time, I've got a chart right here on treasury debt that's coming due across the world. But I mean, look at the U.S. The U.S. has $7.7 trillion in debt that's coming due that they have to refinance on top of the new borrowing.
You have to roll it over, basically.
Yeah, they got to roll it over. And I know,
just like a company would.
Right. And people might counter with, well, you got the treasury or the Feds in the market buying $120 billion a month. But I mean, over the course of a year, that comes out to just under $1.5 trillion.
So somebody else has to be willing to absorb that debt. And
someone else has to be willing to step in, right?
And what price will they pay for it? And that's really the big question. We've seen the Asian buyers, particularly the Chinese, backing away from this market. The Japanese have continued to be relatively good supporters of U.S. bond issuance. The British as well, but who knows? I mean, everybody's right now is scrambling for money to pay their own debts. Will they be able to pay ours is the big question. Right. So anyway, Clint, thanks for that. That's some great ideas. I mean, I think, you know, one of the issues, though, I think is who might be losers in all of this, and that kind of opens up the question of you know, what the Congress is actually likely to look like. And I want to put on my political scientist hat here and just say, you know, there are some areas where there actually is bipartisan consensus, and you know, that includes regulation of big technology, and that could pose a problem for big tech, even if tax rates don't go up. So I think one thing we're not sure of is where that's going to play out, because you have some senators, you know, for example, like Josh Hawley, who's you know, been in the news lately for the wrong reasons, but he's a big proponent of reining in the tech sector, and if he finds common cause with Democrats, that could be bad for particularly the top technology stocks. The problem that I've noticed recently in the tech sector is that it's people treat them all equally, and I think that's partly because of the ETF effect. But we see whenever there's a threat to the leading tech sector, it pushes down other stocks. So I'm just suggesting maybe there's need for caution in that sector this year. I think it's likely to continue to have tailwinds, but politics could be a headwind. The other issue that I've been thinking about is whether, the big depreciation rules that you can take in commercial real estate, the kind that President Trump has benefited from, those could certainly be a target, again, a bipartisan target. So, it calls into question some of the commercial real estate investment trusts, for example, what could happen to them, and also just, some of the other players in big real estate, that could be an issue. But I think the critical thing is that there is the potential for bipartisan consensus behind stimulus, right? And really, this comes down to what's happening in the economy right now. We've just seen a job loss for the first time since April, which is very, very bad news for the economy. It indicates the need for some kind of stimulus. But as we saw in the election here in Georgia, a lot of Republicans are quite happy to spend money that the country doesn't have without regard to taxation. I think they've got used to the idea of huge deficits. And so, there's a pretty good chance that we could actually see some deficit spending even without the bipartisan consensus. But the problem, I think, and you alluded to this earlier, is that the Democratic caucus is pretty broad, and it includes people like Joe Manchin from West Virginia and Kyrsten Sinema from Arizona, who are really, I would say, they're basically Republicans circa 1955. They're not really Democrats as a lot of people understand them, and they may be more of an obstacle than the Republican Party. If Mitch McConnell decides to oppose everything the Democrats propose, everything right down the line, then yes, that 60 filibuster number comes into effect. You need 60 votes. But the Democrats can do a lot with 51 votes. The question is, can they do it with those two senators on the sideline? So really, I think that the big question here is, how are the Republicans going to position themselves going forward? We've seen a big crisis just now. If they decide if some senators begin to decide on the Republican side that they're willing to break ranks and support Democratic initiatives, we could see kind of a landslide of people coming out and saying, actually, I do want to do these things. I'm not prepared to just be obstructionist like we were. I mean, remember, in the Obama administration, there were more filibusters during his 8 years in office than there had been in the entire history of the U.S. Senate up to that point. So the Republicans, as you say, could block anything. The big question is, can they hold their caucus together? If they can't, if people start slipping out and saying, I'm going to support this Democratic initiative, that could open the floodgates. And that's what makes me wonder about this Goldilocks scenario. And I think it's true that we're likely to see increased spending without a big tax bill, but there are a lot of things that the administration can do to raise taxes administratively. I mean, they can adjust rates, they can adjust the implementation of rules, but there's also things like increasing funding to the IRS. One of the big unknown facts about the IRS is that you are vastly more likely to be audited if you are a low-income person because you don't have lawyers. And because the IRS doesn't have the money to audit the big guys. And there are estimates, of billions and billions. I forget the figures, but it's in the multiple tens of billions of dollars that they could collect if they started beefing up IRS enforcement. So to me, the final message is that this is all up in the air. It all depends on what happens in Washington, not just, in terms of the stock market, but also what happens in terms of stimulus and so on. Right now, I think the news is positive. It's good for the sectors that you've mentioned, but there are a lot of unknowns still, and it's going to require very careful attention. You can't just buy and hold, I think, this year. It's going to be up and down. It's going to be back and forth between sectors. Yeah. Anyway, that's all from us today. Just as a reminder, Clint has just launched his new option service, which is just blowing my mind. I mean, the number of gains we've seen, triple digit gains in short periods of time, is just remarkable. You can sign up for it by clicking on the link below. And as always, we welcome you to sign up for the Bauman Daily and, of course, for the Bauman Letter if you like. Anyway, we'll talk to you again next week. Thank you.